All right, everyone, welcome to week 11 of Selling Weekly Lottos. Every week, I sell what's the equivalent of lottery tickets to gamblers in the stock market by using options. All right, just like every week, let me just start with the disclaimers. Number one, I don't use margin. All of my positions are covered with the shares or secured by the cash. The reason I don't use margin is because if things go against you, you're going to take way worse losses, and I don't want to take the risk. Number two, I'm not married to my stocks, all right? I'm happy to sell them if they get called away. I'm happy to buy them if they get assigned, all right? Number three, this is risky. This is considered a risky strategy. All investment is risky because investments can go down, all right? That being said, the winner this week is me. All right? That is 10 out of the last 11 weeks I've won. This week I made $1,807 using $141,000 in collateral. Okay? Let's take a look at my positions one at a time. Okay? The first one, boom. I bit 65p. I sold this for around $780, 10 contracts, and I bought it back for about $160. All right, that is about a $500 something profit. I'll put it in the writing. All right, and then the second one, boom, Meta. All right, now this one's interesting. I actually sold this and then bought it back, sold it again, bought it back, and then sold it again, bought it back again 3 times. All right. The reason that is because on Monday, when I sold it for around $1,000 the first time, it went to $700 within 30 minutes. So I thought, hey, this is already giving me about 2 days worth of gains. So I'll just buy it back because it happened within 30 minutes. And then later that same day, it went to $950 again. So I'm like, okay, this is back to where it was when I first sold it. So I'll just sell it again. And then within 30 minutes to an hour again, it went down to like $650. I made another $300 and I said, hey, this depreciated more in 30 minutes than it would have taken for around 2 days worth. So I bought it back again. And then the next day it went to like 1,100 or something. So I'm like, okay, well, I liked it at 1,000, so why not sell it for 1,100? So I sold it. And then both these positions were down big this week, guys. They were at one point, the Meta went down to like 730 or 735. So the contract was at around $3,000. All right, down about 2,500. All right. And then the IBIT contracts, IBIT went down to like 64, low 64. So I was down in that around $700, $800 too. Okay, but everything bounced back on Friday because of Federal Reserve Chairman's speech. All right, so that got me thinking, right? If the market doesn't ever recover and it just continues going down, this strategy will not work, guys. Will not be a passive income strategy. If the market just continues to go down, this at the very best becomes a not losing as much as traditional investing strategy. But here's the thing. The central banks are going to continue devaluing the currency. They're going to continue using I forgot the term, but the printing money, okay? The monetary policy is just to continue printing money, and that's devaluing the US dollar. So for the last 15 or so years, the stocks actually haven't really been going up. Technically, the dollar has been going down. And that's what gives you the edge when you invest, whether it's just through normal investing like buy and hold or like writing options. That gives you the edge against this devaluation of the currency. And this is why this strategy is working right now, because the market continues to go up, due to the devaluation of the currency. All right. But if it did go down, if that changes ever and it continues to go down over a long period of time, this no longer becomes passive income. This is now that at that point is just not losing as much as you could through traditional investing. All right. Let's go ahead and take a look at my benchmarks. Boom. All right. So big good stuff happened this week because my weekly yield is up, so that makes my yearly estimated percentage yield over 50%. That boosts all my metrics. Now in 11 weeks, I'm up above $15,000, and that gives me a projected like annual income of over 71,000, and that's only using $136,000. All right. If you had $136,000 in just a traditional investing, you would probably make around $13,000 in a year. I'm already past that in just 11 weeks. All right. So yeah, I'm pretty happy with this week's results. But again, I got pretty bailed out by the Federal Reserve Chairman's speech on Friday. Everybody, I guess, thought he was sounding like he's going to reduce interest rates, and the whole market pumped on Friday. But I would have probably been down around $2,000 to $3,000 this week if he said something else. So with this strategy, guys, you are at the whim of the market and what the market decides to do. So you gotta pretty much hope that the market continues going up. Everybody's a genius in a bull market. That's what they say. Right now, it's a bull market. You can throw your money into almost anything and probably get a profit right now. So I'm not gonna say I'm a genius or anything. It is a bull market. Like I know some people who bought some random IPOs in the last few months, and they got 100% returns. They didn't even know what the company does. They're just like, oh, this company's IPOing, I'm just gonna throw in $1,000 or $5,000. Oh, I doubled my money. Cool. They just opened up double. And that's what happens in bull markets. Just everything goes up. So the real test is gonna be when this market isn't so forgiving, and see if I can continue to win then. All right. But for now, market is on easy mode, and gonna just probably keep winning until it goes to hard mode. All right. Let's do a little bit of comparison. Okay. In a HYSA. All right. Oh, important. This stat right here that I'm looking at is the weeks to double. All right. This one's a really important one to me. Right now, it's going to take me about 90 weeks, 89 weeks. It's a little bit more than 1.5 years to go double my total income. My total income is going to be hopefully my current average risk. Now, that's about 1.5 years. If you have your money in a high yield savings account or in treasuries or in bonds, that's going to take you 18 years to double your money. Okay, if you're a 32-year-old, you're going to be 50 years old the first time you double your money, and you're going to be 68 years old the second time you double your money. All right. Kind of unacceptable for me. It's a little bit too slow. And that's only if they stay at 4%. If they reduce it, which is likely, it's going to take you even longer. All right. And with passive investing like buy and hold index funds, with an average rate of return of 10%, it takes you 7 years to double your money, which is actually pretty good. So don't like, I actually think just normal investing is totally fine. Okay. If you don't want to be like actively managing your portfolios, but still with this option strategy of writing options, all right, it's taking me about 1.5 to 2 years to double my money. If I was a little bit more risk averse, maybe 3 years, and that's a lot better. So I'm going to keep writing options for passive income, and hopefully keep winning and giving you guys those results. Okay. Well, have a good one, guys. See you next week.